LoopRing LRC was the best performing cryptocurrency in the last 7 days. It went up by 24% while the rest of the market tended to go down. Now, does it make sense to jump on this rally now? I think probably not, because I've done a backtest. I've done a simulation of buying and selling the LRC token, trying to time those ups and downs properly. There's a lot of things to discuss, so let's jump right in. Hi, so LoopRing has been on quite a run recently, right? Among the top 100 cryptocurrencies, it has been the best performing. There's only Monero, Tethos, and Bora that come somewhat close. But most of the cryptocurrency market, it went down recently, right? There's not a lot of positive momentum right now. So does this mean now is the time to buy LoopRing? Because really, when being invested in LoopRing, we have to time this to a certain degree, right? The volatility is massive, a 78% crash over here, another crash here of more than 50%. Just recently, since November of last year, we went down by 88%. So buying and holding LRC is probably quite nerve-wracking. We want to time this somehow. And one way to time things like this is by using moving averages. So we could buy whenever the price is above the moving average, and you could sell, could be outside of the market whenever the price is below, thus not being exposed to a crash of, in this case, 53%, right? We would only be in the market when times are bullish. But the question with such a strategy is, what's the ideal duration for the moving average? Should we go rather short, as in be quite reactive to the price, right? Exit relatively early, enter relatively early. Should we go very short on that, but then potentially also have these failed signals here in the middle, right? Where we might be buying, selling, buying, selling, buying, selling, and potentially generate a lot of fees in the process? Or should we alternatively go with a rather longer duration, be a bit less active in trading, but therefore also generate way less signals? Now, I've built a macro-enabled Excel sheet that does a simulation of buying and selling. So that way we can try to find out what's actually the best duration. So the first price I've got is from the 1st of September 2017, and it goes all the way to today, the 26th of May of 2022. And with that macro, we can set several parameters here, right? How much do we want to assume in trading fees? So I've set here Binance 0.1% for each buy and for each sale. I've set 10,000 US dollars as a starting capital. There's no gas fees. So this is now centralized trading. We can then simulate to only be in the market whenever the price is above and not do anything when the price is below. So we are not betting on any falling prices here. This is just betting on rising prices. And then we can iterate over those different simple and exponential moving average durations. And here comes the magic. The Excel sheet calculates each of those different performances. It's a bit flickering, of course, but that's because there's so much calculation to be done. And so we've got the simple moving average, the exponential one, we've got the double exponential one, and here as a comparison, buying and holding LoopRing over the time frame. Now, when we go to charts, we can see this nicely laid out. On the x-axis, we've got the duration of the moving average, so all the way from 1 day, which just looks at yesterday's price, to the 52-day moving average. And we've got here the simple and the exponential one. And we can see the best simple moving average is the 36-day. The best exponential moving average is the 9-day. And what's also noteworthy is that pretty much any moving average trading strategy here outperformed buying and holding, unless you went pretty short, unless you are getting in and out of the market all the time. If you take a minimum duration of 7 days or so, you outperform buying and holding. And this is noteworthy. Why? Because sometimes we are completely outside of the market here. Look at this. The portfolio line in green is completely flat. The reference price here in white is the LoopRing price. So we are not even always invested, but still we outperform buying and holding. Now we can also do the exact opposite, right? We could, for example, only bet on falling prices, never bet on rising prices. That's then how the chart looks like. So here we can see the portfolio line is not outperforming buying and holding. So the green line is below the white line, we would still have made some money. So that's 36% per annum, but buying and holding would have been better. But this now assumes only betting on falling prices. Actually, this is the linear scale. Let's toggle this to the logarithmic scale for better visibility. So now a horizontal line here is a 10x from one another, not so much a fixed value. So we can actually see what happens here in the early days. So you can see we only make money during crashes, right? We bet on falling prices. We make money when there's a crash. We profit whenever the price is below the moving average. And we simply hope that the price stays below the moving average, that the current momentum continues. Now it does make money, but not by much. What if we combine both? So we buy whenever the price is above the moving average. We bet on falling prices whenever the price is below the moving average. Let's look at the best moving average here, the 36-day simple moving average. Let's also look at the 9-day exponential. So this is the chart. In white, we've got LoopRing. In green, we've got the combination of the best moving average, both buying and selling. And look at this. This is, I think, very nice. We are in the market. We follow LoopRing whenever prices tend to rise. We bet on falling prices whenever the price tends to fall. And look how constant this outperformance is. We rarely have a massive drop, right? Look at LoopRing. It went down very, very massively during this bear market, but we were pretty much untouched. We simply just went sideways. And over the long term, of course, a massive, massive outperformance. 10K US, just buying LRC would have given us around 100K by the end of the testing period. The trading strategy would have given us not 1 million, not 10 million, almost 100 million. So let's say here 50 million. Of course, it's all theoretical, right? We couldn't have known these moving averages beforehand, but still we can see this performance is pretty constant. You do have your sideways movements, but over the long term, you tend to perform very, very well with this. Now, this is the best of the moving averages here, right? It's the simple moving average. Let's look at something that wasn't as good, the exponential one with a 9-day duration. That's then this chart over here. Still very nice, right? But the outperformance here isn't that clear. So if there's only a decision of one moving average to take, I would definitely focus on the 36-day simple moving average. And so let's just look at this, 36 days. That's the current situation for LoopRing. And this is the resistance I was talking about. This is the problem here, right? Let's also look at this intraday. It almost works like magic. This is where the price has a lot of respect. We would have decided to bet on falling prices here on the 10th of April. And since then, we went down by 41%. And that's why I think these last 7 days of rally, which are impressive, they might be coming to an end. Overall, historically speaking, this indicator worked very, very well for LoopRing. And it does say that we have run our course. It does say going down from here is more likely than going up from here. Now we can further refine this, but I'm not going to get too much into details here. This is a buffer zone around the moving average, which further increases the performance somewhat. So I've calculated the best buffer so that we avoid buying and selling here all the time, but instead stay in the market and only sell once we have a significant movement. I am going to keep this relatively short in this video. The only thing you need to know is that currently, to be really on the safe side that we get bullish, we have to go above 69 cents or so. This is declining, and the longer we stay sideways, the better. But still, there is a lot of resistance here. This is not positive for LRC. Now, if you're interested in this Excel sheet, or if you want to get the best moving averages for different assets, right? I've done this backtest for a lot of different assets. Then you do want to check out the premium membership. So that's down here, thebitcoinstrategy.com. In here in the statistics library, you can download all of those Excel sheets. You can get the best moving average duration for all kinds of different assets. You can even get a TradingView script that adjusts the best moving average based on your asset selection. And of course, there's also a lot of exclusive content. So if you want to learn more, the link is in the video description. It's currently $49 US per month. Besides the paid content, I'm also going to continue to publish free content here on YouTube. So don't forget to subscribe. And if you're looking for a Telegram group, simply search for Bitcoin Strategy channel within the app. We are now more than 2,000 people over there. This video shows more details on the premium membership. Would be great to see you over there. So hope to see you in that video, and thanks for watching this one. Bye bye.